Thanks, everybody. I have many slides as well. I'll try to zip through the material, though, because I recognize the screen is quite small, and I promise I tried to make my font bigger. I'm going to go through a few areas. I'll give you a bit of my macro background. I'm bullish on nickel, no surprise there. Then I'll talk through a bit more about my project, which is based in Canada. And then I'm very interested to talk about the innovation work we're doing, which we talk under an umbrella we refer to as clean nickel, our trademark term. And then I'll run through our evaluation. So my view of the world is that there's not enough nickel for the electric vehicles with the plans that are out there. Also, the electric vehicles require nickel with the lower carbon cost, which really requires a shift in our industry. So miners are not used to genuinely making changes. We've put a lot of sort of lipstick on our business over the recent past with ESG, but quantifying the carbon cost for nickel units is very real, and it's going to be a differentiator as well for the nickel we're producing. And it gets more complicated than just the carbon cost attached to your nickel, where buyers are coming up the value chain because they're scrambling to just get their hands on supply from safe countries that they want to work with. So this is my only macro slide, I promise. So top left, EV sales. Choose your hockey stick, the Canadian reference term, to charts that take off like that. A lot are going to be sold. What that means for demand, top right, is you're bolting on a huge amount of demand, even though you've got the stainless growing at 5% each year. So the baseline, the world's nickel already is allocated to the stainless business, and all of a sudden there's this new demand category. And as an industry, we're not ready for that. So bottom left, if you stack up that demand with the red line over the supply we know it's coming out, there's a forecast gap. And then that's just getting your hands on nickel units. If you look at genuinely what's occurred with the European legislation, where in January of next year, all new vehicles sold in the EU are going to be stamped with their carbon footprint, that becomes very real. And that is what the OEMs have been talking about for the last 3 years, where first it's going to be stamped. You're going to walk into a Volkswagen dealer and you're going to be able to compare a higher footprint on the battery electric vehicle versus the internal combustion. And that's what the automakers have been preparing for. So the world, we think, is going to match similar regulation. And this is where the buyers, the new demand, are out in front of the mining industry on this front. And then it's more than just carbon. So in terms of accessing countries, it's very interesting, especially now with the war in Ukraine, taking Russia off the board. When you speak to the car companies and they talk about Indonesia and the Philippines really being backed by Chinese money, Taiwan heating up, it's a deep concern. And then you've got within sort of friendly countries, general protectionism. So as someone sitting on a lot of nickel in Canada, the Inflation Reduction Act out of the US was great news. But really what it does is it just puts bigger and bigger sort of guardrails on the business, and they're closing in. And then you've got general ESG. You've got whether it's the environmental concerns, deep water tailings in Indonesia. It's a very tricky business for these car companies to be wading in to try to get their hands on supply. And this is why they're coming up the value chain. As you just heard about Stellantis partnering with Australian supply, they're looking elsewhere as well. So against this world, what I have is in Northern Ontario, a 1-hour flight north from Toronto. I have over 30,000 hectares, over 100 kilometers of strike, and I have 2 tracks that we're developing. So my first track is my high grade zone, which we refer to as the W4. That has an historic resource. It's small. It's 1% nickel, all above a few hundred meters depth. We've proven it goes deeper. That's the sort of grade mine that should be turned into a mine. So we've got that as a starter in a high-grade business. I'll talk about how there's great infrastructure nearby with a permitted concentrator as well. So that's my track 1. My second track, I have a large scale, aka low-grade zone we refer to as the Carlang. We drilled the first 20% of the Carlang, and we came up with 2.4 million tons of nickel contained. So it comes to surface, it's 0.25 grade, but it's in exactly the sort of place you want to be finding nickel, and I'll talk to you about that. Then my third thing, which I wrap it all together, is that clean nickel strategy, and we're doing a lot of neat, innovative stuff on that front. So here's my land package. This is the province of Ontario, so central Canada. Again, north from Toronto. We're just north of Sudbury, Ontario, which is a major nickel sulfide producing area. So that's where Vale, the old Inco, and Glencore, the old Falconbridge, are based. So we're just north of that in this, what has historically been a gold camp. So Timmins is a major mining town, and we're just south. So we're just outside town. Our whole property is within 50 kilometers of Timmins. And what we have on our land package is we have that high grade in the south referred to as the W4, and then the large scale, I'll talk about the Carlang. But we also have just on the west side of our property, a privately held company has an operating mill. So already permitted and operating, a 1,500 ton per day mill. Originally was built for the nickel that was originally produced down on the Shaw Dome. And that's a very neat little setup where we can get our W4 up and permitted, and we'll run it through that local mill. They're already shareholders of ours. So let me talk about our high grade. So this is the thing I have with the historic resource. My W4, it's 1% grade. Again, the type of grade that traditionally gets turned into mines. It comes to surface. It's a little under 700,000 tons, so it's a small resource. But we picked this up and we drilled it off over the last couple of years. It has wonderful grade. You see there is a sample at 17%. And here we are with, you see the new drilling we did over the past couple of years. We discovered what we call the W4 extension. So the mineralization, which had gone down to just 200 meters with the historic resource, we proved it goes down to 500 meters. And we're working now on pulling together all of the updated drill data with a new resource to come out on this next month. So this is my W4. It gets much bigger. It also stretches to the east. So this is my drilling from the end of last year, beginning of this. So we've had some tremendous hits. So you see that our new resource will be at 1% or likely better, and we're all within 500 meters of surface, so very easily accessible. So what I'm working on now is we have this historic resource with the just under 700,000 tons at 1%. We're pulling together all our drill data. We're targeting a doubling of the resource size. And it's neat because we've initiated permitting and we have that local mill, and we're targeting being up and into production in 3 to 4 years with our high grade business. And that's just getting started on the high grade. So across our property, there's more of this mineralization near surface. There's lots of great targets. Basically what this means is if I can fill that local mill with 1% or better mineralization, the numbers work out that it's basically a 5,000 tons per year production, which is small, but it gets of interest to the car companies, and that's what's starting the conversation. So across our property, we've got a lot of mineralization, and where we think it could be going is if you compare the Shaw Dome to the Kambalda Dome in Western Australia, which has very similar geology in these komatiates, where ours go east-west, and down in Kambalda going north-south. So the right side of the slide shows you an area which is the same, basically geography, same footprint as we have in Ontario, and the Kambalda's produced over 50 million tons of material. So once you find these deposits, they're usually in sequence. You see on the right where they go down the same mineralized channel. It has not been properly explored in Northern Ontario, and that's what we're really excited about. So our play is we've got a huge amount of land. We think high grade near surface. There should be something like the Kambalda with the same geology. So shifting over now to the large scale, this is what we call the Carlang. So in the northern part of our property, we have 2 potential targets, which this is that again, but when you look at the MAG survey, so the pinks and purples show you where these potential high MAG hits. They're huge geographies. So I'm focused in on the one on the right first, Carlang. This is where I'm going to start talking about another company called Canada Nickel, which has had great success in the markets. They have the Crawford deposit, but I've got that drawn to scale, the Crawford deposit, bottom left. The thing I'm talking about with Carlang dwarfs the Crawford deposit. So zooming in on the Carlang, the neat part where I like to be doing drilling, where I like to spend exploration money, is where I know I'm going to hit something. So they have a lot of historic data. This is all grab samples up this Carlang trend. It goes for over 10 kilometers. So the purple is the government interpretation from the Geologic Society. And then we've got surface samples on this. Again, I've got the oval of Canada Nickel showing you how big Crawford is. And this is historic drilling. So if you see all the triangles, this has been drilled all the way up the trend. We know all that data. We have it all. That's why I say it's over 10 kilometers long. Last year, we drilled off a 1.4 kilometer section of it. We call it the A zone. So you see the A zone outlined there. So we drilled off over 8,000 meters last year to pull together an initial resource. It's boring, consistent mineralization at 0.25. We chopped off the first 1.4 kilometers. It's all consistent for the 10 kilometers. The resource we came out with was the combined 2.4 between indicated and inferred, 2.4 million tons of nickel in the ground. I like to do the math back to electric vehicles. So for contained nickel, that's basically 37 million EVs in the ground. So that's only the first 20%. So it gets kind of silly because I'm telling you I've got something that's likely 5 times larger. That's based on historic drilling. We have a huge amount of nickel. And the neat thing is when you compare our mineralization to other low-grade deposits up in Northern Ontario, none of us have processing, so we all have to build processing. But then if you look at access, Canada Nickel, for example, choppers into their drill site. We've been driving because the whole thing has been clear-cut by the logging business. Overburden, big one here, overburden, ours comes to surface. The other one's up in the Abitibi area where we are, average about 40 meters of overburden. So if you're going to go through to get to a mineralization at just 0.25, which is basically dirt with some nickel in it, not having to go through 40 meters of dirt really helps your economics. So ours comes to surface, 15% of it is actually an outcrop. And then in terms of modeling it, we modeled down to 400 meters, which is a deep pit, but obviously with 10 kilometers in operations, you go up the trend. To sort of juice the numbers, other folks, in our business, this is sort of what folks do, modeled it down to a ridiculous depth. We have one company, Aston, which is up there, almost 850 meters, which is a very deep pit. So we have an eye towards operations. We modeled down to 400 meters, but much more importantly, we've got 10 kilometers to go. So now I'll talk a bit about clean nickel. We trademarked this term clean nickel. It's got a bit of a marketing spin to it, but also we tuck in under the clean nickel umbrella a bunch of research we're doing. So we're really going where the industry is going. When you talk to the OEMs, they are pivoting all of their potential production over to the EVs. That's why, and you likely have heard this from other companies, the OEMs are in a panic to put their hands on nickel. And it's not just any nickel. It's because of the press that they've received around, whether buying an EV is genuinely a green decision. You've got these tight restrictions on carbon, plus, as I was saying earlier, beyond carbon. So all of this consideration is there. And then when you talk to the car companies, and of course I've got a Musk slide here, and everybody likes to talk about Musk's comment from a couple of years ago, which really launched the sort of junior nickel explorer world, saying we need more nickel in the world. The other thing I'm more interested in, and I hear from conversations with the OEMs, when they wade into the nickel world, it's insanely complicated in terms of how we ping our material around the earth before we get to an end product. So what we're working on with clean nickel is trying to have the lowest possible carbon. Our work in the lab right now is on a couple fronts, bio-leaching and then carbon capture. So on bio-leaching, we're doing work where we would potentially have a concentrate come out, and we've proven that our rock is amenable to be doing bio-leaching. We could potentially do heap leaching, but I want to do a lower CapEx vat leach situation, which, and this, you can't read this obviously, but it's in vat leaching, taking a high-grade concentrate. We've had great success, and we're continuing to research how well we could unleash natural bacteria to recover the nickel out of a concentrate that comes out of the mill, for example, our local mill. What this would mean is we could skip the smelter and the refiner, and from our little footprint, sort of back to Musk's comment about how insanely complicated the supply chain world is, we would have from our property the capacity to precipitate out whatever end product is required from the battery plants being built in Southern Ontario. So we're working on bio-leaching, which is really a game changer on the processing front. The other thing we're working on is carbon capture. So I flew here with carry-ons, so I couldn't bring my rock, but our rock has this peculiar geology where when you expose it to the air, it naturally sequesters carbon. So we have rock samples that as soon as they're chipped off and flipped over, within a week they turn black, which is actually pure carbon. So we're in the lab now calculating how much carbon we can sequester just in our operations. So what we will likely have is our tailings. So after we've taken the rock out of the ground, retrieved the nickel out of it, sent our rock to tailings, we have the value of the carbon we're able to pull in. So we're rolling that all together. We're going to have a methodology approved. And I'm telling you, the potential for, if we do this right, the value from the carbon credits could eclipse the value from the nickel we produce. So what we have upcoming are a new resource on the high grade, more results on our clean nickel research. And just quickly, I'll talk about valuation. We've got a tight float with only 51 million shares outstanding. We stand at, in Canadian dollars, 8 million equity value. I spoke about Canada Nickel. We have almost half of their nickel in the ground, and we trade for less than 5% of their valuation. So that's just off of our low grade, our large scale, and we compare very favorably, and purposefully I have Talon on here, which is many multiples bigger than us. But on our property, I anticipate we have similar mineralization as Tamarack. We just need to find it. So that's my quick drive-by.